Okay, let's unpack this potential for Bitcoin. I mean, surging towards $200,000, maybe even $300,000 in the coming months.
Yeah, that's the kind of forecast that definitely makes you sit up and, take notice.
It really does. So today we're doing a deep dive into this whole idea of a possible bull market frenzy in the Bitcoin space.
Mm-hmm.
We've looked at, market analysis, historical data, and paid close attention to insights from folks like professional investor Dirk Hardig.
Right, trying to pull out the crucial bits.
Exactly. Our mission here is basically to cut through the noise, give you a clear picture of what this potential frenzy might look like, so you feel informed, not overwhelmed.
And it's interesting how different pieces seem to be potentially lining up here.
Like what pieces?
Well, you've got signals from technical charts, patterns from the past, and even the bigger economic picture sort of hinting in a similar direction.
Okay, good point. So let's start right there. This bull market frenzy.
Right.
What does that actually mean in this context?
Fundamentally, the analysis suggests a period of really rapid price growth.
Just for Bitcoin.
Well, mainly Bitcoin, but it could potentially pull up the wider crypto market too, maybe even spill over into stocks. It's about significant upward momentum.
Okay, and the timing. That seems pretty key.
Mm-hmm.
When might this frenzy potentially begin?
The thinking is it could start anytime between, say, now early May 2025 and maybe mid-February next year.
And where does that window come from?
It's largely based on looking back at previous Bitcoin cycles, specifically the periods after the halving events in 2016 and 2020.
Right, the halvings. Maybe just a quick refresher for anyone who's not deep into Bitcoin. What's a halving?
Oh, sure. Good idea. So a halving is basically a built-in Bitcoin event. It happens roughly every 4 years.
Okay.
And it cuts the reward for mining new Bitcoin exactly in half. So it slows down the rate new coins are created.
Which can affect the supply and therefore the price.
Precisely. Less new supply hitting the market, often leading to price pressure upwards, historically speaking.
Got it. So based on those past halvings, 2016, 2020,
Yeah.
what's the usual lag time before things really heat up?
Historically, it seems to take somewhere between roughly 180 and 300 days after a halving for Bitcoin to enter that really strong growth phase. That's the range we see from those past examples.
Okay, so a time frame to watch. But, how do analysts actually spot this? Are there specific indicators that they're looking at?
Yeah, one tool that comes up a lot in the analysis and seems to be a favorite for many pro investors is the Bitcoin logarithmic regression tool.
Logarithmic regression. Sounds a bit technical.
It can sound that way, but think of it visually. You can find it on platforms like TradingView.
Okay.
Imagine it draws these channels on the chart, kind of like boundaries. There's a lower green one and an upper red one.
Right.
The key signal, according to this analysis, is when Bitcoin's price breaks out of that lower green channel
And goes where?
into the space between the green and red channels.
Yep.
Some call it the black area.
The black area. Okay.
Historically, entering that zone has often meant the start of that accelerated bull run. It's like the price is moving much faster than its average long-term growth trend.
So breaking into that middle zone is a big technical signal. Are there also, specific price points people are watching?
Definitely. The analysis really highlights Bitcoin needing to get past $100,000 USD. That's seen as a critical condition for the frenzy to truly ignite.
Wow, $100 K. That feels like a major psychological hurdle.
It absolutely is. But even before that, an earlier positive sign would be Bitcoin surpassing its old all-time high.
Which was around $73,000 back in March 2024, right?
Exactly. Getting above that level would suggest the market's shaking off that consolidation period and starting to build serious upward momentum again.
Okay, so if we see the ATH broken, and then potentially $100 K, what kind of peak price are we talking about for 2025, according to this analysis?
This is where Dirk Hardig's view comes in quite strongly. His forecast, based on his work, points to a potential peak somewhere in the range of, say, 200,000 to 300,000 USD.
2 to 300,000.
Sometime in 2025, yeah.
That is a huge leap, especially considering the price mentioned in one source was around 32K when it was written.
It's a massive potential jump, yes. It really underscores the scale of growth being talked about if these factors align.
Now, this isn't all just charts in Bitcoin history, is it? The analysis mentioned broader economic factors, too.
Absolutely. There are a couple of key sort of macroeconomic tailwinds pointed out. First one is the Fed potentially starting to cut interest rates.
Okay, and how do rate cuts usually play into this?
Well, lower rates generally make holding cash or low-yield bonds less attractive.
Right.
So investors often start looking for better returns elsewhere, even if it means taking on more risk.
Which could mean money flowing into.
Things like stocks and, yes, potentially cryptocurrencies like Bitcoin, shifting from safer assets to riskier ones seeking growth.
And did the analysis give any clues about when a rate cut might happen?
There was mention of a potential cut around, I think, November 7th. The source suggested it might be the second cut in this cycle.
Okay, interesting. So that could add fuel. What
It
was the other
could.
economic factor? U.S. elections?
Yes, the U.S. elections. There's a historical tendency, apparently, for the stock market to perform pretty well in the period after an election.
Regardless of who wins.
The analysis seemed to suggest this trend held across different administrations: Obama, Trump, Biden.
Huh. And how does that connect to Bitcoin?
Well, interestingly, that post-election period often lines up roughly with Bitcoin's typical cycle peak, which tends to be around 18 months or so after a halving.
So like these two cycles, the political economic one and the Bitcoin halving cycle, could potentially sync up.
That's the idea being floated. The timing seems to align in a way that could potentially amplify the effect, pushing both traditional markets and crypto higher together.
Let's circle back to those Bitcoin cycles for a sec. That 4-year pattern seems really baked in.
It's a strong theme in the analysis, yeah. This general pattern of 3 bullish years followed by 1 bearish year, it's been pretty consistent since about 2013.
Which adds weight to the idea we might be in one of the bullish phases now.
That's the argument, yes. And the link between the halvings 2016, 2020, and the big price surges that followed is obviously a key piece of historical evidence for this.
And we already mentioned the timing after those halvings.
Yeah.
About 300 days post-2016, maybe 180 days post-2020 for that big move to start.
Exactly. That gives us that potential window we discussed earlier for things to heat up this time around.
Did the analysis mention anything about, like, monthly performance? Are some months typically better than others?
It did touch on that. September historically tends to be a bit weak. For Bitcoin, average returns are negative.
But not always.
Right. September 2024 actually saw a positive gain, bucking the trend. October, on the other hand, is usually quite strong on average,
Okay.
although October 2024 was more moderate. But one interesting point was that the data suggested an average gain of something like 47% over the coming months could be a signal of that breakout really taking hold.
Okay. Now, we keep coming back to Dirk Hardig and his 200K, 300K forecast. What else did the analysis say about his view or his strategy?
Well, first, it's important to stress that's his professional viewpoint based on his analysis.
Right. Not a guarantee.
Exactly. He apparently acknowledges that past performance isn't foolproof, and everyone needs to do their own homework, their own research.
Good disclaimer.
Very important. But strategy-wise, he's mentioned building positions in stocks and crypto, focusing on Bitcoin.
Okay.
His outlook seems to be that the next year or so could be a key period, a time to potentially cash in, as one source put it, if his forecast plays out.
And what about dips or setbacks along the way?
He apparently views those more as buying opportunities, especially for long-term positions.
So add on the dips.
Sort of. The strategy mentioned was buying Bitcoin on spot exchanges and then moving it to cold storage.
For security. Keeping it offline.
Exactly. Away from online risks like exchange hacks.
Okay, so pulling this all together, if someone's trying to make sense of this from an investment angle staying neutral, of course, what are the key takeaways?
Well, based purely on the analysis reviewed, getting past that old all-time high near 73K is seen as that first real sign of bullishness returning.
The initial confirmation.
Sort of. Then there's the idea that setbacks aren't necessarily game over, but could be seen by some as chances to build a position for the longer term. And the strategy of buying spot and using cold storage was mentioned as one approach discussed.
Okay, great. Let's try and synthesize this. We've covered a fair bit. What are the absolute must-remember points for you, the listener, from this deep dive?
I'd say the potential timing window now through mid-February 2025. Keep an eye on that logarithmic regression tool, maybe.
And the price levels.
Yeah, the price levels are key. Breaking the old all-time high as an early sign, and then that $100,000 mark as a really significant breakout point.
Triggering the frenzy, potentially.
That's the idea. And then those potential peak targets discussed, $200,000 to $300,000 underpinned by the historical cycles, and those potential economic tailwinds like rate cuts and post-election trends.
Right. So hopefully we've distilled the crucial stuff here, giving you a solid grasp without drowning you in data.
Yeah, trying to offer that shortcut to getting informed on this specific outlook.
Okay, so here's a final thought for you to chew on. When you see this convergence, historical patterns, technical signals, economic factors, all potentially pointing the same way, what does that make you want to explore next? about Bitcoin, about market cycles in general. What questions does it spark for you about risk, opportunity, and how you navigate it all?